Hello and welcome to the program. Boy, we have a lot to talk about in the stock market. Stocks have just dropped off a cliff. This is a 4-hour chart of the SPY representing the S&P 500. And this is the whole year right here. So before we get into the details and where it's going, I ask for your support. Please subscribe to our channel. Our goal is 100 subscribers. If you could click the like up button to help us get this channel out there more. YouTube likes it and we like it, so I'd really appreciate that. We want to reach 100 subscribers, so thank you for that. Okay, so here we go. Now notice these trend lines we've drawn is a 4-hour chart a long time ago. And it's funny, if you notice these white lines, there's always some type of consolidation, okay? But as you can see, let's go to the daily chart here real fast. Here we are on the daily chart. And so here we have it. The SPY has broke out of this downtrend and just fell off a cliff, reaching on its way to 407. It got lows today of 409. So right now the S&P 500 is not looking good. In fact, let's take a little study here. If we draw a line from, say, here, well, we can't see that one, so. We draw that to there. We are down 10.84% from all-time highs for this year. So now we are in what's called a technical correction. The market has just entered a technical correction, and let's take a look. That's not looking good. Let's take a bigger picture here. Let's look at the weekly chart time frame, and let's see what's going on here. So, okay, this is year to date right here. We well past the line in the sand of 426. Our next range of support was going to be 416, blew right past it. So now, we have 407.50 as its next down target. And again, it's way in this down range here. Let's go to this back to the daily really fast. I don't want to throw a quick study in here. Let's see what we're going to put in here. We're going to put in the 200-day moving average and the 50-day moving average. The red's the 50. So we're well below the 50-day moving average. The green line is the 200 simple moving average. And S&P just blew past that. I mean, that would have been here. So I guess a few days ago on Wednesday, we started to lose it. It held it, and it just gave it away. So there's a lot of data right now. Oil WTI is slightly increased today. It went up 2.3% to 85.18 a barrel. And now this war, the ground invasion for Israel is going to shoot into Gaza soon. So Iran's got some stuff going on, and the 10-year yield this week was very volatile, reached 5%, and mysteriously bought up by the plunge protection Federal Reserve and brought it back down to 483. Literally just in a couple hours back on a couple days ago. So that's not too good. So let's go ahead and remove the study here. And let's take a look at the QQQ. QQQ's been interesting now. Remember, they were in an uptrend. QQQ was an uptrend. And when we did this video last week, it was right here, testing the low range of the uptrend. Well, it broke out, down, tested this a gray area here we had shaded here, moved back up, very volatile, moved up again. In the last 3 days, Wednesday, Thursday, Friday. Just gave it all back and kept dropping. So now that line of the sand was crossed, touched on Wednesday, was not able to hold. We lost it. So the NASDAQ, this is the QQQ representing the NASDAQ, very yield sensitive. And now, there's type about this is the new norm, higher yields for longer. That could be the new way it is of business these days. The reports came in, labor reports are strong, people still have their jobs, inflation's going to stick around. So therefore the NASDAQ took a big hit this week, the biggest of them all. And looking right out of that downtrend. Unbelievable. So, you know what we can do real quick? Let's just draw a little line from here to there for now. And we're going to make this red. Make it a little bit bolder. So we'll get rid of this uptrend lines here because we broke it. We'll keep this base. We'll make this gray now that we lost that line in the sand. So 350 has been broken. Let's highlight this one as green for potential support. If it, it looks like it bounced off it yesterday, and as you can see, it held up. So let's get rid of this gray area. We don't need that no more. That's been broken. Let's take a larger photo here. Let's go to the weekly chart real quick. And you can see this week was resistance 359. Sellers pushed it down. So this week it opened here at 353, went up to 359. It pushed it all the way down to 342 and closed this week at 345. So there you have it. That's the weekly chart. And let's go over a couple other things. Intel, by the way, big moves. They had good earnings. Look at this. They were down here and it shot up from 32.50 to 36.40. That would have been a nice day. Those of you who day trade the market, this week was fantastic. You're trading the TQQQ, the SQQQ, your 2 and 3x leverage, so you can be in and out of these positions. Amazon, they had some great earnings. Look at that gap up from 120 up to 130 in one day. Okay, so that was from yesterday, and then today it shot up. Well, actually, it was pre-market. That's why there's the big gap. U.S. Steel made a nice big move today, which was unexpected. Earnings came out. Look at that nice big move here. But let's take a look. Apple, they are looking weak. The big weekday yesterday, that helped bring the market down. So, let's draw a little quick trend line on Apple. They seem to be on a downtrend. So let's go ahead and highlight this. And it's definitely on the downtrend there. So there's Apple. Let's follow that and see what it does. In fact, we're going to duplicate this. And we are going to see, I guess, well, can we match something in there? We're going to leave this one right here. We're going to say that's the range. So we'll leave that for now for Apple. Microsoft, big hits. Look at this. This thing has been all over the place. Up, down. They came out with some earnings. They weren't bad. It gapped up and it completely sold off. Nvidia, how they've been holding up? Well, they're holding up good, considering they're holding this, $400 range, 405. It's pretty impressive. Google, drop off on Google. Their earnings, were slightly good, but look at that big drop from 140 to 121. That's huge. Huge drop off. So Google, Alphabet here, they're hurting. That's a daily chart. Look at that. And anything else good to look at here? Well, some of the banks have been selling off too, by the way. Look, here's Bank of America. They're just coming down. JP Morgan. A lot of volatility. They've been tanking. Earnings look, they beat. The estimate was 389. They got 433 is the actual. So, but they're reading something in the future here. It's not looking good. The market likes to be 6 months ahead of everything. So, oil. We'll go to Oxy real quick. They're holding stable. They're holding above 56. But as you can see, it's been jumping around. It's definitely not bad, from ranges from $60 to $65, $66. There's definitely opportunities for making money. Well, anyway, we appreciate you guys watching the program. We'll keep you updated. Please subscribe, and thank you for watching.